The second way to tell the casino might not be telling us the truth is how investors start to behave. Because think about it. If you knew the paper was maybe fake and you knew the real price should be higher, what would you actually do? You'd do two things. You'd sell the paper and you'd buy the physical thing. Right? You'd get out of the certificate market and you'd start buying a lot more of the real thing. So the question is anybody actually doing that? And the answer is yes, they are. In fact, the people doing this are the most sophisticated money markets on the whole planet. It's the people that print the paper currencies. It's the central banks. They have been buying physical gold at the fastest pace in recorded history. In the first quarter of this year alone, central banks bought a net 244 tons of gold. That is the strongest first quarter ever recorded. And it's also not a one-time thing. They've now bought over 200 tons in 10 of the last 11 quarters. And the crazy part is that a big chunk of that buying was never officially reported, which is kind of interesting. According to the World Gold Council, they say their number includes an estimate of undisclosed purchases, which means gold these banks are buying but not telling anyone about it. Now, this shadow accumulation has allegedly been happening since 2022. The official numbers that banks are reporting, that's just the minimum. Right? The real number is probably way bigger, maybe as much as 10 times bigger, especially for China. Now, that behavior, that's the first half of it. They'd buy more of the real thing. But it's also what they're selling to buy it. What are they selling? That would be US Treasuries, the bond market. Because for 50 years, the strategy for all central banks was doing the opposite of this. Central banks took your extra dollars and they parked them in US Treasuries. They basically lent the money back to America to earn a little bit of interest. That was the safe thing to do, and everybody did it. Any country that didn't do it, in fact, and tried to route around the dollar got a lot more freedom in their country, right? But now, we're seeing a reversal of that strategy. Foreign central banks have essentially quit growing their pile of treasuries over a decade ago. And lately, some of the biggest holders have actually been selling US Treasuries. China has dumped hundreds of billions of dollars of US debt and rotated into gold. Now, they're not dumping all of it at once. That would not be smart because they want to extract as many dollars as they can. If they sold all of it at once, they'd crash the value of their own bond holdings. So they have to do it slowly and strategically. That's true for all the other countries holding our treasury bonds as well. But what they're selling, basically, is the paper promise of supposedly the most powerful government on earth. And they're doing that to buy gold that pays them zero interest. And on paper, that sounds kind of crazy, because why would anyone trade an asset that pays you for an asset that doesn't? You would only do that if you no longer trusted the promise of that paper. What was the promise? The promise was, give us your paper, park your money into our assets, we'll be honest, we'll protect you, we'll trade with you, and your life will be awesome, right? But after the Iran conflict exposed the US, and after decades and decades of the forever war model, which was funded by money that could be printed to infinity, giving the US unchecked power, the world sort of had enough. The world does not want dollars. It wants real money. They want what economists call multipolarity, where it's not just one nation that rules the world, but many nations that contribute. Now, if this theory was true, how would we know that it might be true? What would be the evidence? Well, first, we'd see those US Treasuries being sold off over a long period of time. And we have been seeing that. We would also be seeing investors selling paper gold. And we have been seeing that. Money has flowed out of US gold ETFs. We'd also see gold as an asset surpass treasuries as the reserve asset for central banks. We are seeing that. Gold now represents a bigger share than US Treasuries. Gold demand in China also hit a record 207 tons, which breaks a record that stood for over a decade. So combine all this together. How do we know the casino might not be telling us the truth? We might see things like the prices diverging between paper and the physical markets. We'd see the world selling the paper claims, and we'd see the US export gold. And we are. Gold is going east. And that's because gold is the #1 export out of the US for several months in a row now. central banks worldwide are dumping the dollar's paper and hoarding the real thing and hiding how much, right? The question is that the evidence of an honest market? This theory says, no, it isn't. This is not what a healthy, honest market looks like. All right, but there's another piece of evidence that shows us this theory could be true. And it's because China told us way back in 2014. Remember when the head of the Shanghai Gold Exchange stood up and gave a speech at what's called the LBMA, the London Bullion Market Association, which, by the way, is the Western paper gold pricing system. So while he was there, he looked at the gold establishment and he said, Shanghai gold will change the current situation of consumption in the East priced in the West. And then he said, when China has the right to speak in the international gold market, gold's price will be revealed. So basically he's saying once China has a seat at the table, which they obviously now do, that's when the world will finally get to see the reality of the price. And that was 12 years ago. In 2026, all of this is sort of clicking into place. So then the question is, well, what is China actually doing? What are they building? And what they're building is their own version of a casino, where they get to say, the house can't cheat. And that is why they're shutting down retail paper gold trading. That is why the ICBC, Construction Bank, and the rest of them, that is why they all take effect on the same day, on July 24th. This is not a coincidence, because in that same time window, China's also turning on the other half of their plan. Their brand new gold settlement system run out of Hong Kong and working together with the Shanghai Gold Exchange. Here's how it's going to work. Shanghai is the vault and the price. It's an exchange built on physical delivery. So when metal trades over there, right, real metal actually will have to move, which means the price will have to show real supply and demand, not a mountain of paper claims that people are using to bet against on what the price of gold will be tomorrow, right? That's real price discovery that we talked about. But because of China's capital controls, the foreign nations can't easily get in. That's where Hong Kong comes in. Hong Kong is going to be their front door, where Shanghai sets the price based on real discovery, and Hong Kong lets the world trade on it. So you put them together, and what you now have is a parallel financial system that's going to be the alternative to the system in London and New York that's going to be sitting outside the dollar. Now, how do we know how big of a deal this is going to be? What we know is that Hong Kong is growing its physical vault capacity from around 200 tons to over 2,000 tons. They're doing a 10x increase. Obviously, you would not need a vault that big for a paper casino. But if you want to settle in real gold, obviously you'd want as big of a vault as you can build. And the reason why China wants to do all this is because they understand that if you control the price of the most trusted money on earth and you settle it in your currency, the yuan, then you've given your currency what's called an anchor. Not an official gold standard, but something that ties to it, something that manages people's expectation of stability. They know the world doesn't fully trust the yuan on its own yet because it's controlled by the Chinese government. It's not freely traded. But the world trusts gold. So if every major commodity deal can be priced in yuan and settled against real gold sitting in the Shanghai vault or somewhere close to their trading nation partners, then the countries that were nervous about holding the yuan will have a reason to hold it. Because behind it sits that anchor, the thing that nobody can print, that they can then use to fund the forever war model. Right? That is how China challenges the dollar without actually going to war with the US. That is China's move, which leaves the obvious question, right? What is the US going to do about it? The theory says that the US will try to recreate a similar idea with gold-backed treasury bonds. Now, here's a fact that sounds made up, but it's actually completely real. The US government owns something like 8,000 tons of gold, allegedly. We don't know if this is what's called unencumbered gold or if it's still there, but that's what the official numbers say. Could be a lot less, could be a lot more. But on the government's books, that gold is not valued at the market price. It is valued at a price set by law back in 1973 and was never updated since. That price is $42 per ounce. Gold is obviously trading around $4,000 per ounce. So officially on paper, the United States values all of its gold at about $11 billion. In reality, at today's prices, that gold would be worth closer to $1 trillion. It's $1 trillion gap. It's basically hidden by an accounting rule from the Nixon era. So how the US could fight this is with just the stroke of a pen. The US could just revalue that gold and update the official price from $42 to something closer to the market price. Now, the moment the US does that, more than $1 trillion in value would appear on the Treasury's books. That's money the government could use without creating or issuing a new bond. In fact, the Federal Reserve has actually published research on this idea. The Treasury secretaries talked about monetizing the asset side of America's balance sheet.
Within the next 12 months, we're going to monetize the asset side of the U.S. balance sheet for the American people. We're going to put the assets to work.
There's also a proposal floating around from an economist named Judy Shelton for a 50-year Treasury bond that you could redeem in either dollars or physical gold. Now, what that would do is it would make the U.S. Treasury bond partially backed by gold again. The exact same trick that China is doing with the Yuan. So that is the West's answer to the East. If China is going to anchor the Yuan to gold, then the counter is, okay, fine, we'll just do the same for the dollar, right? And that is also why some people out there believe, and this is big speculation here, but that this reevaluation could happen sometime in July, maybe July 4th, right? America's 250th birthday, where the US revalues its gold and launches that gold-backed bond as kind of a monetary declaration of independence.
Think if on July 4, 2026, which is going to be the 250th anniversary of our nation's founding, Treasury offered for the first time since 1971, when President Nixon closed the gold window and ended any kind of gold convertibility for the dollar, you would be establishing a link between the US dollar and gold.
Now, do I think that it's going to happen on that exact day or happen at all? I don't know. I have no idea. But what I do know is that the Fed is looking into this. The Treasury Secretary has talked about this. The gold bond proposal is a real idea. And even if the revaluation is nonsense, if it doesn't happen with the repricing of gold, it might still happen anyway, but not on the gold side, but on the devaluation of the dollar side, right? Gold does not have to go up for this to happen. The dollar just has to go down a lot, and that would be the same thing. Luckily, we have a Fed chairman who's going to